Welcome to the Smarter Money Life, hosted by Andy Mattingly, featured guest on IndyNowTV's Smart Money Minute, frequent financial expert for local news, and Smarter Money Life contributor at Forum Credit Union. Helping members live their financial dreams is at the core of what we do. Understanding how your decisions and habits impact your life is key to reaching those dreams. It's great to be back with you. I'm Andy Mattingly, and today our topic is how to best pay for your home improvement projects. The key is using the best payment method for the type of project and your current financial situation. Surprisingly, there aren't that many ways to pay for home improvement projects. The most important thing, though, is you need to balance the cost of using a loan and how that impact to your monthly expenditures might change your financial issues later. So let's talk about some of these ways that you can pay for home improvement projects. Now, the first one, you may argue with me, isn't a payment, but it might just be a DIY. There are some projects like painting or landscaping that is mainly just about labor cost more than it is material cost. So if it's something you can do, maybe you just DIY and sort of pay yourself for those projects. Another option is to use your savings. For small projects, it might be best to save each month and wait until you can pay for all of these projects before you start doing them. Now, if you have a really small project, maybe the best way to do it is to use your credit card, especially if you have a low rate and it also offers rewards. If you know you can pay that balance off in 9 to 12 months, then maybe that's a way to do it. Now, if you're getting bigger projects, and these might be things that are over $5,000 or more, you might want to look for a personal loan. It offers flexibility, has usually lower interest rates, and you can get it pretty quickly. Now, here's another option that some projects will offer, which is vendor financing, which means whoever is doing the project for you might be willing to finance it for you. Now, they might have higher interest rates, and that's going to increase the overall cost of the project. So you really want to be careful if you're going to go down vendor financing and make sure you understand all of the options there. Now, another thing is, especially if it's a larger home improvement, you might want to think about using the equity in your home. Going to be a lower interest rate. You can probably get a higher amount, and it'll have, some low monthly payment options. Now, it does take a little bit more time to get approved for these, and you do have to have equity in your home, but that's an option. Now, if first mortgage rates keep falling and you currently have a low rate, you might want to, at some point, think about doing a cash out refinance of your first mortgage. This means you refinance your entire mortgage, take the money out you need for your home improvement. This is going to be the lowest cost when it comes to monthly. It's going to be lowest cost when it comes to interest rates. The big thing, though, is you just want to make sure you don't just keep stretching out your first mortgage and keep doing it for 30 years all the time. In the end, your choice of how you pay for home improvements can have consequences for your long-term financial well-being. That's why you need to make the choice that fits your current financial situation. That's all we have for you today. Thank you for watching. To learn more, visit the Smarter Money Life page at forumcu.com, subscribe to the Forum Credit Union YouTube channel, and look for the Smarter Money Life podcast wherever you get your podcasts. Remember, today you have the opportunity to build the tomorrow of your dreams. Until next time.